Hey there, did you know that only 1 in 3 Americans have money saved for retirement? Shocking, right? Well, today, we're diving into the world of investing to help you make smart money moves for a better financial future. Welcome to our beginner's guide to investing. In this video, we'll walk you through the basics and importance of making wise investment decisions to secure your financial growth. Let's get started. Investing for dummies. It's a phrase that's thrown around a lot, often with a hint of condescension. But the truth is, investing can be a daunting task for beginners. There's so much information out there, so many options to choose from, and so many risks to consider. It's no wonder that many people feel overwhelmed when they first start out. But investing doesn't have to be complicated. In fact, with a little bit of knowledge and some smart money moves, even beginners can start building a solid investment portfolio. So if you're new to the world of investing, here's a beginner's guide to making smart money moves. First things first, it's important to understand what investing actually is. At its core, investing is the act of putting your money into something with the expectation of earning a return on that investment. This could be anything from stocks and bonds to real estate and commodities. The key is to choose investments that have the potential to grow in value over time. One of the most important things to consider when investing is your risk tolerance. This is essentially how much risk you are willing to take on in order to potentially earn a higher return. Generally speaking, the higher the potential return, the higher the risk. So if you're someone who is uncomfortable with the idea of losing money, you may want to stick to more conservative investments. Another key concept to understand is diversification. This simply means spreading your investments across a variety of different assets. By diversifying your portfolio, you can reduce the risk of losing money if one investment performs poorly. This is why many financial experts recommend investing in a mix of stocks, bonds, and other assets. When it comes to actually choosing investments, there are a few different options to consider. One popular choice for beginners is index funds. These are mutual funds that track a specific market index, such as the S&P 500. By investing in an index fund, you can gain exposure to a wide range of companies without having to pick individual stocks. Another option to consider is individual stocks. While this can be riskier than investing in index funds, it also has the potential for higher returns. If you're interested in picking individual stocks, it's important to do your research and choose companies that you believe have strong growth potential. In addition to stocks and index funds, you may also want to consider investing in bonds. Bonds are essentially loans that you make to a company or government in exchange for regular interest payments. While bonds are generally considered to be safer than stocks, they also tend to offer lower returns. Of course, investing isn't just about choosing the right assets. It's also important to consider your investment timeline. If you're investing for a short-term goal, such as buying a house in a few years, you may want to stick to more conservative investments. On the other hand, if you're investing for retirement, you may be able to take on more risk in order to potentially earn higher returns. Before you go farther, don't forget to subscribe to our channel for more financial tips and tricks. And we'd love to hear from you. Share your own experiences with making your money work for you in the comments below. Let's support and learn from each other on this journey to financial empowerment. Thanks for subscribing and continue the video. So, investing can seem intimidating for beginners, but it doesn't have to be. Here's a simple guide to help you make smart money moves and start building wealth. 1. Understand the basics of investing. What is investing? Investing is the process of allocating money with the expectation of generating an income or profit. This can include stocks, bonds, real estate, and other assets. Why invest? Investing helps grow your wealth over time, combat inflation, and achieve financial goals such as retirement or buying a home. 2. Set financial goals. Goals you plan to achieve within the next 1 to 3 years, such as building an emergency fund or saving for a vacation. Medium-term goals. Goals you plan to achieve in 3 to 10 years, like buying a car or a home. Long-term goals. Goals that are 10+ years away, such as retirement savings or funding your children's education. Thrilled an emergency fund. Why you need it. An emergency fund covers unexpected expenses like medical bills, car repairs, or job loss. How much to save? Aim to save 3 to 6 months worth of living expenses in a high-yield savings account. 4. Pay off high-interest debt. Prioritize debt repayment. Focus on paying off high-interest debt like credit card balances before investing. High-interest debt can erode your financial health faster than you can grow it through investments. Number 5. Learn about different types of investments. Stocks, shares of ownership in a company. They offer high potential returns but come with higher risk. Bonds, loans to governments or companies that pay interest over time, generally lower risk and returns compared to stocks. Mutual funds, pools of money from many investors to buy a diversified portfolio of stocks or bonds, managed by professional fund managers. ETFs, exchange-traded funds, similar to mutual funds but traded like stocks on an exchange, often have lower fees and offer easy diversification. Real estate, property investment can provide rental income and potential appreciation in value. 6. Start small and diversify. Start with low-cost index funds or ETFs. These funds offer broad market exposure and low fees, making them ideal for beginners. Diversify your investments. Spread your money across different asset classes, stocks, bonds, real estate, to reduce risk. 7. Use dollar-cost averaging. What is dollar-cost averaging? Invest a fixed amount of money at regular intervals, e.g. monthly. This strategy helps reduce the impact of market volatility. How to implement. Set up automatic contributions to your investment accounts to ensure consistent investing. 8. Take advantage of tax-advantaged accounts, retirement accounts. Contribute to 401ks, IRAs, or Roth IRAs. These accounts offer tax benefits that can significantly boost your long-term savings. Health savings accounts, HSAs. If eligible, contribute to an HSA. They offer triple tax benefits: tax-deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. Number 9. Automate your investments. Set up automatic transfers. Automate regular contributions to your savings and investment accounts to ensure you stay on track with your financial goals. 10. Educate yourself. Continuously read books and articles. Invest in your financial education by reading books and articles on investing. Some recommended books include The Intelligent Investor by Benjamin Graham and A Random Walk Down Wall Street by Burton Malcolm. So there you have it, a beginner's guide to making smart money moves. Investing for dummies doesn't have to be intimidating. With a little bit of knowledge and some smart decision-making, even beginners can start building a solid investment portfolio. So don't be afraid to dip your toes into the world of investing. Who knows, you may just find that it's not as complicated as it seems. If you find value from this video, please like, share, and subscribe to the channel to get more information on financial freedom and wealth management. There are 2 videos that I prepared for you. These videos will add more value to your life. Click on one of them and watch to improve your wealth mindset.